Welcome to our latest conversation with Karen Fagan, former Head of Treasury at ITV and now Head of Treasury Consultancy Services at AccessPay. Welcome, Karen.
Thank you for having me, Emily.
It's quite fine. So today we're going to be focusing on the importance of cash visibility and bank statement feeds. We're going to touch on a few topics. Firstly, just learning more around Karen's background and experience in Treasury. Also projects that she was heavily involved in at ITV. Some of the risks and challenges she and her team face due to inefficient statement retrieval processes. And importantly, how they tackled these at ITV, as well as some good hints and tips on how other organisations can tackle these same issues. Finally, we're going to run through a bit of an outlook at the future of Treasury and Karen's new role at AccessPay. Just to introduce myself as well, my name's Emily. I'm one of the senior account managers at AccessPay and see firsthand some of the problems corporates can experience when it does come to inefficient cash management processes. So I'm going to be here to ask Karen a few questions as we go through today. So Karen, just to start us off today, could you tell us a little bit about how you ended up working in Treasury?
Yes, completely by accident. When I was at school, I just wanted to work in a bank. I liked maths. I was good at maths. I loved filling a good form in or a paying in slip. I managed to get through school a couple of weeks work experience at my local branch of Barclays and absolutely loved it. And I also actually worked in our school bank. What was the Midland Bank back in the day, opened a little branch in our school. This is a long time ago, Emily. So back in the day when people used to pay cash into banks, the kids at school used to come and pay the cash into the school bank. I absolutely loved doing that. So I left school at 16. Wasn't particularly academic other than my love for maths and metalwork, which was another conversation. So I tried to get a job in a bank and it just wasn't happening for me. But I ended up getting a job as an office junior in a firm of accountants. I did bookkeeping and accountancy. They put me through night school to do that. And then that's where my journey started, really. So they ended up putting me in a small audit team where this was a long, long time ago before spreadsheets were even a thing. So the customers would come in or the clients would come in with a carrier bag full of invoices and a handwritten ledger, and I'd pull together a set of accounts from there. So I've had a good grounding of very, very manual processes. But from there, I ended up getting a few different jobs in different organisations and quickly became a bit of a bank rec expert. But the first role I got with Treasury in the title I was probably in my early mid-20s. I was a Treasury assistant and it was the first time I worked for a global organisation. So it was a diagnostic company. They had offices all around the globe. They were just putting SAP in. And it's the first time I came across FX rates and posting journals into an ERP system and using a fully automated system. So that was kind of my first role in Treasury. And then from there move through a few other big global organisations. Japan Tobacco was one, and then ITV for 16 years.
Imagine what it could have been if you'd followed your woodworking career.
Oh, metalwork. We'll talk about that offline later.
No, we'll stay on topic today. Could you actually tell us a little bit about your role at ITV?
Yeah, I mean, obviously 16 years is a long time. And when I first started there, everything was reasonably manual. We had an ERP system, we had Oracle, but from a Treasury point of view, there wasn't a TMS system. We had a notional pool. It was all manual journals. All the FX trades were all accounted for manually. They were paid manually. The confirmations were manual. So it was a massive change to where we sort of ended up. I think my main responsibilities as my role evolved, was to be responsible for the net debt reporting and the covenant compliance certificates, as well as being a business partner to the service centre, to group finance, and also having sort of that main relationship with our cash management banks as well as our sort of system providers. So yeah, I think building relationships was key. But just going back to the net debt, I think having confidence in your net debt numbers was key, and because everything was quite manual at the time, yeah, we soon knew that we needed to do something to change that.
And in the early years at ITV, how did Treasury obtain visibility of the group's cash?
Yeah, I mean, when I first started, it was, we were still a reasonably global organisation, but nothing like ITV is today. So we didn't have as many banks and as many bank accounts as they have in more recent years, but it was still a mixture of logging into different banking portals or just waiting for your subsidiaries to send their bank balances in. So as over time, we acquired a lot of independent production companies who all obviously had their own banking relationships and their own number of bank accounts. So it soon became clear that understanding your cash position was an issue. At any one time, we couldn't just log into something and see what our cash position was. So we knew we needed to do something to change that, because it was just becoming too manual and taking too long to do. So you just end up, if something is too difficult to do, if something else more urgent crops up, these really manual processes don't get run as often as they should. So yeah, we needed to change.
That's interesting, because it's what we hear a lot from other corporates. I'm sure there's probably a few people on the webinar today who can relate to that. In your opinion, how did the lack of visibility impact on things like month ends and audits?
Yeah, when it came to month end, usually, a big corporate will have a 4 or 5 day close process. In that time, all of the different subsidiaries are responsible for submitting their trial balance, and a part of that will, of course, be your bank position. So what would end up with is that the Treasury team wouldn't really get a true reflection of what the net debt or the net cash position is until the 5th or the 6th day, once that close process is completed. So really, you want to get visibility of your bank balances to give you comfort that that figure you're getting is accurate, because you're taking their word for it, I suppose. I mean, of course, your local finance directors will be signing off the bank recs and things like that, but sometimes, because it's such a short close process, those reconciliation sign-off processes take longer than those 4 or 5 days. So it could be that a local FD signs off the bank rec and finds a material difference that should have been, that needs adjusting. So it was important for Treasury to get visibility on day one. So on working day one, you should know what your month-end cash position is for the group. And then as the numbers start to come in over that 4 or 5 day close process, you're confident that those numbers were what you were expecting. So yeah, it's definitely, it can give you some nervousness. And then when it gets to audit, the same again, it's because you're having to go through that audit process and that sign off. The fact that you've got your cash position on working day one means that you're really confident in what you're putting in front of the auditors. So yeah, it's definitely something that it's important. If you've got a complex banking setup with lots of different banks and lots of bank accounts, it's important to get that visibility.
And get that visibility quickly as well.
Yeah.
So once you'd actually identified that there was a need to make a change, what did you do next?
Yeah, so we were already going through, or just starting off on, an RFP process, looking at payments. So we were up for renewal with our existing provider for all of our payment processes, for not just for Treasury, but for the whole of finance, really. So we needed to be able to get all payments from our various back office systems. We had an ERP system, a talent system, payroll was separate, and of course the treasury management system. So we needed a way for all of those systems to connect to our bank. And then we stumbled across an event that Swift were hosting at their offices, and they were talking about payments in the cloud. So we went to that. We thought, oh, cloud. That was a time where nobody really knew what that meant. It was a long time ago.
Future is here.
Yeah. So we went to that, and actually it was AccessPay were there. They were talking about their offering. And yeah, they were talking about payments in the cloud, and not just payments, but also being able to get the statements coming in. And although we already had 940s going into our back office systems for bank recs, being able to put them into a user interface that visualized what those statements were instead of logging into lots of different portals, to be able to see statements, see cash position, and be able to report on the trends of what those balances are. So it was at that point that we added AccessPay to the RFP process, and we expanded it into getting this cash visibility. And yeah, meeting quite a few of the team members there at that event was really helpful. And we discovered that they were only 10 minutes up the road in Manchester, which at the time, before all these virtual calls were a thing, because if we're going back to 2015, that having somebody local was really a big advantage to us. So yeah, so we took it from there.
And following on from your RFP process, the big question, why did you choose AccessPay for your cash visibility and statement piping?
Yeah, well, I think it was important to us to have a bank connectivity partner, somebody who was the expert in their field. Somebody that already had existing relationships with some of our banks. But also that could be really flexible in the approach, to be able to talk to all of our back office systems, and not just the TMS, to be able to get payments from all of our different systems in different formats. But somebody that could grow with us, because we were going through a lot of acquisitions, somebody that was really collaborative and agile, and somebody that could work with us and almost become an extension to the finance team, really, and to the treasury team. So yeah, it was the customer approach, the customer success, and that agility, and to grow with us, really.
And so obviously you did have a successful implementation and rollout of the AccessPay solution. Have you got any examples of the changes that were implemented based on the data that was gathered once daily visibility was obtained?
There's a couple of things that spring to mind. So one of them was a particular division that was very heavy on individual productions, and because they made lots of different productions, they had lots of bank accounts to support those productions. So we're talking like 100 plus bank accounts. Each of these bank accounts had quite an immaterial-ish balance on those accounts, but as a combined, it was quite a big chunky number. So it was only really once we were able to get the visibility within AccessPay's cash management tool. There's a concept of tagging different accounts, so putting a label on the different types of accounts that you've got. So we were able to organise and get some analysis based on these buckets of cash that had been labelled to try and get a picture of what the trends are like on these balances over time. And because all of these balances had quite immaterial balances sat on them, it was difficult for the finance teams really to be able to transfer any excess cash to treasury, because it would have meant hundreds of transfers. So what we did off the back of these insights was we put a zero balance pool in place for these accounts in this particular division. That meant that at the end of each day, the excess funds would sweep to a header account, and then the local finance team only had to manage the balances in that header, and they were able to successfully transfer more excess cash over to treasury. So of course we can pay debt down quicker. So that made was quite a significant difference, actually, putting that in place. It also, off the back of that and some other insights gathered elsewhere, we were also then able to make some changes to policy. So, I mean, we already had a good policy in place, but it was able to just tweak it slightly so we could start to change behaviour. So encouraging subsidiaries to close bank accounts quicker instead of just leaving them open for forever. Or we don't use it anymore. I'll just leave it there. So it sort of encouraged people to close the bank accounts when they needed to. But also we could start getting some insights as to what maximum balances should be in each region, and we could start changing the policy to tweak those maximum balances. So yeah, there's a couple of things there.
And you've also obviously mentioned the number of banks that you've got, the fact you had AccessPay and you had an ERP system. Did ITV also have a treasury management system in place? And if so, why did you choose AccessPay for the bank connectivity piece?
Yeah, so we did have a TMS in place. It was used purely for treasury transactions, so it was FX hedging, in-house bank, intercompany loans, bonds, etc. And of course, that treasury management system is connected to the banks. But we didn't use it for cash visibility, and I think that the reason for that is because we had so many different systems that needed to connect to banks. It made sense just to have a bank connectivity partner who could sit in the middle of all of our systems, including the TMS and our banks. It's just one provider that can handle that bank connectivity piece for us, who's an expert at doing that. Whereas for TMS providers, although they're expert at connecting treasury transactions to banks, I'm not sure they'd necessarily be an expert at connecting other ERP systems and other bespoke systems that ITV had to our banks. So yeah, it just made sense for us to keep that separate. And of course, because AccessPay are agile in their approach, I don't necessarily think that a TMS provider would be as agile in their approach of connecting other systems to banks. So yeah, we kept that relationship separate.
Brilliant. And obviously, we've touched on cash visibility today, and thank you for kind of giving us more information around the systems that were part of that process. Could you also tell us a bit about how you tackled bank reconciliation, and just share a bit of your experience of how you did that?
Yeah, so I've done a few bank reconciliation projects over the years. So I've had bank recs in 2 different ERP systems, and also used a bespoke reconciliation tool. Both had their advantages. A specialised reconciliation tool, if you go down that route, you will definitely get a better matching rate. You'll be able to be much more flexible in your automatic posting of journals based on bank statement information. They're much more flexible. The disadvantages, of course, it's another integration, it's another system to manage, and then of course there's going to be delays in sending information back from your bank rec tool into your ERP to update your subledgers for what the statuses of reconciliations are. So yeah, but the performance will be better in terms of matching rates and automation. But if you've got an ERP tool, it's kind of the flip side of that. So you've got because it's embedded, your subledgers, your AP and your AR are going to see the status of payments and receipts, in real time as the rec's taking place. It will be updating your subledgers. So yeah, it's a lot more efficient in that way. But the disadvantages are the automation. It can't be as bespoke as you want it to be. It's quite limited. But it depends on your organisation. It depends how complex your bank accounts are. It may be that having your recs in your ERP tool is what you need. It's enough. Your bank accounts aren't as complex. So yeah, it's just a case of working out what's best for you and the type of account you need.
And if we do have anybody listening today who is looking at bank reconciliation as a wider either concern or a project that they're looking to tackle, what would your top tips be?
Yeah, there's the obvious one. Make sure you close down the accounts you don't need, because it's just less config, less things to set up. But yeah, I think for me, having been through it a few times, I'd definitely work backwards and kind of work out what your bank accounts, what transactions are going through your bank accounts, what automation you're going to need. So what would your matching rules look like? What transactions going through your bank accounts do you want journals to be automatically generated from that bank statement information? And from there, you'd kind of understand what the limitations of your tools are. So if you're looking at an ERP, is the automation enough to handle those transactions? So yeah, I'd kind of work backwards, I suppose. But yeah, then the other thing is make sure you've got a really good bank rec report. I think the reconciliation tools are a lot better at that than the ERP tools. But what you need is a report that if you were doing a bank rec on a spreadsheet or a piece of paper, you want a report that would look like that. So with your bank balance, your GL balance, and your list of your reconciling items that make up the difference. You'd be surprised in what I've seen in ERP tools is that there isn't a report that just does that. You have to run about 3 or 4 reports to pull that information together for you to put in front of your auditors or whoever's signing off that rec. So straight away, you're not really getting that much comfort. And if you don't run all the reports at the same time, they just don't all tie in as they should. So I'd say definitely, if you're going down the ERP route especially, get a bespoke report written that gives you all the information you need that you're confident to put in front of your auditors or whoever's signing off the rec to say, this is my bank rec position. So yeah, definitely a good report.
And hopefully that should remove some of those more manual processes that you mentioned earlier. What would you say are some of the biggest risks with handling statement downloads manually?
Yeah, so the obvious one is as soon as you get into as soon as your process involves downloading manually and uploading into your ERP manually, there's obviously the risk of bank statements being left on desktops and then sensitive data in there that could get into the wrong hands. But also that data can be intentionally manipulated before it gets uploaded into your ERP system. So transactions could be changed or removed, or it could just be unintentionally omitted. So you could be missing a day's bank statements. And of course, that's going to lead to errors in your financial statements. But what I would say is that automating isn't just about saving time. It's about getting those controls embedded into your ERP tool. So you could have a control such as alerts for missing statements, or it can alert you if it looks like you're duplicating a statement. It can check that the opening balance on the statement you've uploaded today agrees to the closing balance to yesterday. So there's lots of different controls you can add to make sure that your processes are, fit for purpose, really. And of course, when you get to 2026, if you're one of the larger corporates, UK SOX is coming down the tracks, and that's all about your directors being able to sign off your financial statements and being able to review your controls. Of course, the more controls are automated, the more comfort your directors are going to have on signing off those processes and those financial statements. So yeah, it's definitely about control, having confidence, but also giving your team the time to do more value-added things, instead of wasting time, well, not wasting time, but instead of spending a lot of time with manual processes. There's probably lots of things that have been on your to-do list that you'd really like to do, but your team just haven't got the time to do it. So freeing up that time to do more value-added things, I think, is really important. And also keeps hold of your staff as well. That's not to be underestimated. The cost of employing people, because they want to go on and do bigger and better things.
Yeah, and that's sort of what we would sometimes call like the hidden cost, which is, what else could your teams be getting on with that's either more profitable or, like you say, even just offers them a bit more progression in their careers.
Yeah.
How long was your team spending on manually managing bank reconciliations kind of prior to having a more automated process?
I mean, going back a few years, but when I first started, we had 3 people that were doing bank recs full time, and that was about 60 odd bank accounts, I think it was. Yeah, we got that down after all the automation and the improvements. We got that down to less than 1 FTE, so it was probably about half, really. So yeah, it was definitely incredibly much more efficient than it was when I first started. Yeah, so it's well worth doing. Well worth doing.
I'm sure those team members were very happy with that.
Yes.
And once the project had actually started, were there any problems that you'd faced?
Yeah, I mean, you're going to have some banks that aren't members of SWIFT, so they can't send 940s or camped messages as it's moving to now. So yeah, connectivity for one particular bank or one account could then start getting quite expensive. So the way that we tackled that was by looking at materiality. So we knew that if we could get, say, 70% of our accounts, it would probably cover 90% of the materiality of those balances. So we kind of focused on the larger ones, and then to get around that in the future, we then adjusted policy that that we really, any new accounts being set up needed to be set up where they could be with one of our core banks, our core cash management banks, where we knew we already had that connectivity. So getting those 940 statements was easier and cheaper because we had so many accounts with those banks. So yeah, it's mainly just about that connectivity and the cost.
And you mentioned camped and MT messages coming from the bank there as well. I think as most organisations are aware now, we've got ISO 20022 on the horizon. Looking ahead, what do you see as the biggest trend or development in the field of treasury operations, and generally what should be businesses focusing on staying ahead of?
Yeah. I mean, there are a few things that are changing. ISO 20022, as you say. I think most of the focus seems to be on payments for 20022, but actually all of the purpose of that is to enrich, it's to combat fraud, but also to enrich the data that's going through those payments. And of course, all that enriched data in those payment messages will ultimately come back into your bank statements that are coming in. So which were MT 940s are now moving to camped messages, camped 53, I think. So those camped messages coming back in will then contain, they'll have more fields, so they'll have more enriched data based on the enriched payment information. So I think it's definitely something to be embraced. Don't be scared of ISO. Definitely look into it. Speak to your banks. Speak to your connectivity partner, or speak to AccessPay. Yeah, I think it's definitely something that should be embraced. It's only gonna make things easier over time. And then UK SOX. Of course, that's coming in 2026. Getting those controls automated in your bank reconciliations and controls around your payments as well. Just controls in general. It's the more you can automate, the better UK SOX, or the easier UK SOX will be. And then finally, payment fraud. I mean, that's definitely not going away. It's just getting more sophisticated. So again, if you can automate the controls around supplier setup and doing those confirmation of payee checks on the bank account name at the point that you're setting up your supplier would be, the ideal way to do it, and getting an API. So if you had an API that actually connected to that confirmation of payee checks direct into your ERP system, at the point that your supplier is set up, there should be an alert there straight away, alerting that the person setting the supplier up that there's an issue with the bank details. So yeah, I think that's kind of the gold standard way of doing it, I'd say. So yeah, those are the three things that are coming that are worth everybody's attention.
Yeah, no, and they're all sort of equally as important as each other. We've obviously done separate sessions. So if anybody does actually want some more information on any of those topics that Karen mentioned there, there'll be some extra material that we can provide. But yeah, Karen, thank you so much for giving us a look into sort of your background and projects that you've managed, and some of those really good tips. I guess finally for today, now that you're working with AccessPay, what is your new role going to look like?
Yeah, well, no month ends. That's the main thing. And no year ends. January and February. going to be a breeze this year, I'm sure. Yes, it is. It's very different to what I was doing before. But I mean, I've worked with AccessPay for 8 years as a customer. So when this opportunity arose, it just felt like a great next step for me, and a marriage made in heaven. And of course, I know quite a few of the people anyway, so it just felt like culturally a really good place to be. But as for the Treasury consulting team, I think the aim is for us to be able to support AccessPay customers with some more Treasury expertise, I suppose. Looking at whether any customers have got any bank connectivity projects they want support with, or if you want somebody to review your existing processes and see how we can support you more. But also just any advice, any general advice, if you've got any financial transformation projects in the offing and would like some support, before that starts, before you start going down the route of kicking something like that off. Because I've been through a few of them before, hopefully I can offer some help and advice on there. So yeah, I think just hopefully my experience over the last 20 odd years, I'm working alongside shared service centres and group finance and within a Treasury team. Hopefully that gives the customers at AccessPay somebody else to lean on, somebody else to enhance the customer experience that they've already having with AccessPay. Yeah, that's me.
I think your insight and knowledge on any sort of future bank reconciliation, cash visibility projects would be, highly regarded by anyone looking to embark on that type of project. We are offering a consultancy session with Karen as well, as part of joining the webinar today. So if you or any of your colleagues think that would be of benefit to you, please obviously do reach out to us. I'm just going to wrap up quickly today by saying a massive thank you to Karen. That was a really interesting session. And we look forward to having more conversations in the future.
Thank you. Thanks for having me.
Thank you. Thanks everyone who watched.